happy to be here today and to introduce my distinguished panel. We're here to talk about the disruptive trends that are transforming finance and particularly digital disruption. Well, I'd like to open it up to our panelists. Where do you think digital disruption stands from your perch in finance? Kelvin, what do you see in China? We have a lot of incumbent banks. We have Alibaba growing very fast. Is this something that's gaining momentum in China?
Oh, absolutely. I think disruption in finance, if we can think of emerging markets as a ripe location for leapfrogging and not having legacy infrastructure or technologies, legacy consumer behaviors, I think you see China as a case in point where new technologies, new business models can emerge quickly and rapidly and explode into the new consumer behaviors and create business models and opportunities for all kinds of new and existing market players. I think I would say, just kind of in a word, what I think maybe as a framework makes China particularly interesting is a large-scale market with receptive consumers, tremendous mobile and internet penetration, so the infrastructure and telecommunications infrastructure in place. I would say regulatory openness, despite some of the strictures in traditional finance, you can see characterized by online payments and how that market has developed over time. I know Alain has more to say about that. But also if you see now bank licensing to Tencent and Alibaba and these dominant players in other sectors and other parts of consumer interactions with commerce, I think we're seeing tremendously exciting new developments where Chinese consumers are quickly and easily using their phones now, using WeChat or an instant messenger client to buy goods, to order food, to pay for the transportation in a taxi. All very new and exciting things that I don't think we see even in Silicon Valley or in the US.
Bunty, what's the reality of all of this digital innovation on the ground? Sometimes it sounds a little bit easier than it actually is in reality.
Yeah, look, there are some big macro observations I would just make, and then I'll give one more graphic metaphor for this. Finance in the wholesale sense is an intermediation business, and financial intermediation has existed for thousands of years. I mean, it's one of the oldest professions, if you will. And the big disruptive element of technology is that disintermediation, where people can directly access what otherwise used to be either privity in terms of information or in terms of capital or resources. And so it's a huge democratizing force. But if you took away the context of this technology uplift, if you just looked at the core finance business lines or activities, they're going through their own generational change, notwithstanding all the technological disruption. We're going through probably one of the largest upregulations of the ecosystem in 7 or 8 decades. Certainly amplified by the fact that it's global. It's not just a U.S. or a U.S. and Western Europe or a post-World War II. This is like a global uplift in the way that regulators, central banks, market infrastructure, intermediaries like ourselves, consumers, are all having to change the way that they, and tax authorities, all changing the way that they think about the conduits of their business. And at the same time, you have these emerging economies that have an incredibly large demand for much bigger financial infrastructure than they already have. But this is where I'll just mention quickly kind of a reality statement about this. So a few of us last year, actually as part of one of the World Economic Forum events, which was the East Asia Summit in Myanmar, I hope some of you were able to attend that. A few of us were able to visit one of the larger banks in Myanmar, one of their main offices and branches. And Myanmar is a country with 60 million people, natural resources like we've never seen, strategically located between India and China with a port. I mean, it's an unbelievable story about a frontier market. But you go to the bank, and primarily it seems that their business is people bringing in large piles of actual physical cash, having that cash counted, and then having that cash stored. We were taken to the credit department, and we were shown the loan book. Now, the loan book was actually a book. The book had about 300 or so line entries in it of actual handwritten, we lent this much money to this person, and Mrs. this and that will repay on this date at this rate of interest. So on the one hand, we talk about disruption, we talk about leapfrogging, we talk about all this, but then you have these markets, and even in markets that some of us live in, where you have sophisticated financial capability, you still have an underserved population, and in some cases, and we would know that in India specifically, a very, very large underserved population in terms of real access to financial services. So, I hope that I live forever, or at least for a long enough time to see some of this, but I'm not sure it's happening as quickly as we want it to.
We hope you live forever too.
Thank you. That's very nice of you, Calvin.
Alain, is Swift a disruptor or a disruptee in all of this?
I think certainly at this point of time, you may know that actually we are one of those Stone Age animal that has been created by the financial industry 45 years ago. And the purpose of the institution at the time, which is still today basically, is to making sure that financial transactions can flow seamlessly in between different countries, different institutions, and so the same way that blood will be flowing into your veins, right? And that's what we do. Now, clearly, what we see nowadays, like you mentioned, for Myanmar, I can give you multiple examples, like Bangladesh, or what's happening in Africa and all that, where clearly banks haven't really evolved fast enough, especially in opening up their technology to ensuring that everyone can play into the same arena in terms of offering services to their own customers, especially retail customers. This being said, we see that this is changing. I think, especially when we talk to our clients being our shareholders, we see clearly those people changing their mind and trying to define ways in which it can be actually reinserted into the business, if you like. Initiatives that are taking place, for instance, in Australia, even in Singapore, where I'm living, where clearly you've seen banks now developing, as an industry, new payment systems that are much more seamless, completely interactive, and completely free. And 3 months ago, the Singaporean community introduced a new payment system called Fast. It's literally interactive. You can pay with any sort of device you want to have. Before you were paying something like 1.5 Sing per transaction per payment, today is 0. So that tells you also, that the banks are also reacting to the change that's happening. What I'd like to say also is that one of the main reasons why you have all these new entrants, and you mentioned Alipay, there are many more examples in the world. One of the main reasons is because for many years, and in many instances still today, banks have kept their own IT environment very closed. Basically, everything is completely sealed. You don't have access to all this. Some of the banks have, though, started opening up their own environment through the cloud computing. You have the emergence of APIs that basically enables other companies to start interacting with bank systems as well. So that if you look at the context of Alipay, that's what they've done. Basically, they started working with all the banks, making sure that the payments platform of Alipay is seamlessly interconnecting with all the bank system as well. So much so that they've started actually adding the value-added services that banks are today not capable to do. And the problem that banks are now facing is in doing so, if they're not reacting intelligently, is that they will be left alone with the sort of low-value kind of service like the end of the day settlement, whereby where all the other platforms like Alipay and others will be able to start really working with all the data they have, the payments and all that, to bringing up much more valuable service to the community. So there is a real challenge. At the same time, I think even for the financial industry, there's still actually a major opportunity to leveraging the position that they have today.
Okay, how is this playing out in Japan, which is kind of the quintessential developed economy in this equation?
Well, actually, in Japan, digital wallet is very, very popular. For example, myself, for the taxi, for trains, for convenience store, I don't use cash. I always use phone to pay. Okay, so digital wallet or digital settlement is very, very big in Japan, and I think we are moving into the new era, whereby, for example, even central bank, Bank of Japan, is now thinking about when you calculate the money supply, those digital cash is not included into the M2, the money supply. But now we can't hold it. We have to take all those into account. Otherwise, we cannot really grasp what's happening in the economy. And also the government, Japanese government had been very conservative, but the new cabinet and government are very innovative, and they are trying to introduce those digital settlement as currently it's happening just kind of outside of the nation. Okay, digital settlement is more like a global phenomena, not like a local phenomena. Right. Okay, but the settlement business has been very important business for banks, and the banks are very important for the nation because at the end of the day, the nation has to use taxpayers' money to save bank. So if the settlement business is going away from the bank, it's kind of a headache for the government, I think. So even Japanese government now trying to, address this issue to understand more about this digital settlement and try to let the bank get involved directly into this digital settlement business. So I think this digital thing is becoming more and more the mainstream thing for the economy.
Partha, a lot of action expected in the banking sector in India, yes?
Yes. Bunty started by saying there is a two-eyed monster here, one where the digital is kind of taking pace so fast that it's leaving everything behind. On the other hand, we have people who are not even included. So inclusion is going to be a very big theme when it comes to financial development in India. And in a sense, the Prime Minister just declared that over 800 million people should start having a bank account in the new era. So this is going to be a game where on one side it will be these people trying to catch up, and on the other side the digital actually taking great speed. As an IT head and the CFO, it's often the deadliest combination in terms of saying where I cannot say that digital and IT doesn't play a great role in finance. So it will always tend to play a very big role. And I just wanted to kind of talk about digitization here and how it's going to change the face, I believe, in the next few years. So I just wanted to differentiate between digitization and digitalization. Digitization is already there in many sense that it does, every transaction gets digitized sooner than later, and so will finance transactions. But what we are now talking about is digitalization, where you're trying to do not just one transaction, but entire ecosystem. And just let me give an example. So if a car meets with an accident, so the car then gives a message to say that the hospital is going to receive a patient with this kind of medical condition. It's going to inform the insurance company. It's going to insure the next in kin. If there is another guy involved, it's going to tell him what are all the implications for the other person in the accident. And not only that, it's going to even tell his children are back at home and his spouse that this is what is happening, keep the checkbook ready because you'll have to now deal in terms of some money. And that's the kind of change that we're going to see as we go forward. And this will be in IT language called business movement, because we are now going to create value through the movement because we can capture. And I kind of predict that the next war is going to be fast, who owns the business movement? And therefore introduce a new term called PBT. We all know what it stands for, profit before tax. But in future, I think it will be known for people, business and things. So it is going to kind of look at a very new term for PBT in future. And the manufacturing industry that I come from says about PPM, or parts per million defects. But the new world will say people, process and things. So all these terminologies are going to change, and as we go forward, this digital will stay. And for India, where technology is kind of got to catch up in this area, it may actually allow us to leapfrog. So I'm watching this world with a great amount of things that digital is going to be the new thing. Africa, mobile banking has done a lot more. India is starting to catch up, but I hope that soon people will use as Oki had said, that you can use phones to pay for everything in the rural India, where now even an account is not being maintained. So it's going to be a fun thing.